The big one, of course, is growth value rotation, and this is the big one. We timed it really, really well with this growth, sputtering out and dropping. Q puts were extremely productive with SPY because of the concentration risk. We had a little bit of a bounce yesterday. We're just coming down to this zero, which means we need to digest. We have a lot of earnings that are value-based, for lack of a better word. In other words, they're not in the tech ecosystem, let alone AI ecosystem, and they're doing really well this morning with earnings. So they're holding their own, and we want to keep an eye on this. If this was to move higher on some kind of growth bounce, I think it'll peter out and then roll over again, because I still see this area as the target area, which I highlighted in yellow when I sent out that chart originally, that we were going to come back down into this 1.95 area. So we've only made it to 2 and bounce. So I still think we have growth value rotation, for lack of a better word, still coming in. And then big picture, they're not unwinding growth, but this concentration in MAG 7, which is S&P 7, money that is leaving and going into the Russell, but the money that's actually short covering, the funds that are short covering in the Russell isn't really a true rotation. So I know that's, we are rotating, but that money that is coming out of the Russell in short covering isn't going into NVIDIA. So that's not really the rotation. It's not really money that's going out of MAG. Let me say this again. The money that's coming out of MAG 7 isn't really going into the Russell. It's funds that are short covering. Does it make sense? Anyway.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
And hopefully, before I took off on Thursday, I did a big write-up for trading room notes, but then I was gone long weekend. Remember, this is what I track very closely, not just hedge fund factor rotation, timing, deflation impulses, negative CPI month over month for the first time since May of 2020. That really helped the market. Technically speaking, or even 504, 505, 507 area on the Qs that I've been waiting for a while, the rotation from growth to value, all that stuff I track. But that is for a reason. It's to help you position. It's to help you position into the stuff that's going to go up. So large cap tech is rotating, although I hate to use the word, but I'm going to use it, into small cap value, or I would say large cap value is even better. And this is why I want to kind of highlight this. Is it done? Is the forced selling done in tech? I don't think so. And I know that's weird to say that, but I don't think it's done. And this is going to be proven out with some earnings results that we really need. But I want to kind of focus on this, which is safety pays. Have you noticed, and we're going to go over some of the names that came up this morning, staples and healthcare and defensive plays are hot fire flame. Why? Money's moving into that. They're moving into that with an anticipation that maybe MAG 7 is going to disappoint into the end of the year. So pay attention to that. Seriously. XLV is at all-time highs. Look at ISRG, Amgen, the names that reported this morning. We're going to go over those. Fixed income right now with 10-year going down to 4%, which is my baseline bet, is also helping money rotate out of tech, semis, communications, all that stuff. And right now, even though I think we don't have a real clear path on the 10 and 2-year, we will get a much bigger one after next week, which is FOMC. So I still think boring but profitable is working extremely well. Remember, XHB is very much a tell on the falling 30-year yields, which is, by the way, home building. And XLB, XLE, XLF, and XLI are mostly tells on reflation. Some of these will be under pressure. But for right now, I just wanted to kind of highlight that there is a rotation into safety, and safety is paying. And it's not necessarily IWM, but it is definitely the profitable companies within the Russell 2000. So if I can push you that way, maybe for more swings, I will have done my job. And you know, my whole bit about small caps, I'm very, very bullish as long as it stays above 212.25. I talked about this here, here, February, very beginning of February. This was price target. I really thought we would get above there until gold started taking off and NASDAQ immediately started freaking out. That was the goal, with gold shooting higher. Anyway, long story short, this was short covering from funds that drove it higher, and I'm nowhere near a Tom Lee estimation or any of that jazz. I just see the realization that funds have covered short, and at the same time, the money's not going into Mag 7. It's going into the large cap value, for the most part, healthcare, staples, defense, etc. So I really like this as long as it can stay above 212.25. That's my line in the sand. But I've talked about this for many moons. Don't know where it's going to go, how far it's going to go, but it's not rotating into the FANG stocks. It's rotating actually into value, with small caps clearly looking like this. Just very, very doubtful in my humble opinion. That makes sense? As long as IWM is above 212.25, I do not think New York FANG is going to be able to, which is the Mag 7, is really, really going to be able to take a next leg up.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.